In this video, I'll discuss Q4 FY25 result and Concall of Gravita. So Gravita mainly recycle lead acid battery and produce lead from those scrapped batteries, and they also recycle plastic and aluminium. And in the future, in the next 3-4 years, they are looking to venture into new verticals like steel, paper, rubber recycling, and another thing is lithium ion battery recycling. Okay, and if I see their lead portion of their business contributes 80% to their volume. So lead business for now is very big compared to other verticals of like plastic and aluminium, but in the future they are saying that in the next 5-6 years the lead will be around 50-55%, and in the next 3 years they are looking to bring down lead towards like 70% of their whole volume. And geographically they are present in India, Sri Lanka, Romania and Ghana. Okay, and they have in total 12 land in these all countries. And one thing with this industry is really impressive, that is a tailwind. Okay, because I am saying, because see, Gravita is one of the biggest recycling company in India, and what their management is saying that they are saying that like if Gravita do not get the market share from other companies, if they want to keep their market share at flat, then also they can grow their volume by 25%, and they can grow their profitability by 35% for next 3-4-5 years. Because why this kind of a confidence they have? Because of the shift from unorganized segment to organized segment. Okay, like jewelry, if we see in jewelry also there is a huge shift from the unorganized segment to organized segment. In this recycling industry also, if we see, there is a huge shift from the unorganized scrappers to the organized scrappers. Okay, so that is the point with this industry, and that is why this industry have a huge tailwind behind them, in terms of also the government initiatives, in terms of also the unorganized to organized shift. Okay, so that is the point with this industry and Gravita. Let's talk about the result part of Q4 FY25. In this quarter, they grew their revenue by 20% year on year. Okay, they registered a revenue of 1050 crore in this quarter. And if we see their past performance also, they are doing 15 to 20% of revenue growth every quarter. In terms of volume, they grew their volume by 13% in this quarter. Last quarter they grew their volume by 33%. This quarter they grew their volume by 13%. They are saying that in terms of volume for next 4 years they will grow about 25%. Okay, and there will be sometime low volume growth and there will be sometime high volume growth. Like in the last quarter they grew their volume by 33%, but in this quarter they grew volume by 13%. On an average they will do 25% in next 4 years. Okay, so in terms of volume also they are looking really good, and they are also saying that they will do what? They will also try to acquire some companies, some good company in other segment like steel, like rubber, paper. By that also they will do the volume growth. Okay, and in terms of the segment wise volume growth, if we see the segment wise volume growth, lead grew by 12%, aluminium grew by 61%, and the guidance is also in a similar level. If we see they are expecting lead to grow about 18 to 20% in the future in the next 3-4 years. Aluminium to grow about 40% in the future, and plastic also they are expecting 70% growth. So if we see the lead is around the company average 25%, but the incremental growth will come from the aluminium, from the plastics. And if we see, they are entering into new verticals like rubber. They established a new rubber plant in India. They are setting a lithium-ion battery recycling plant in Mundra port. So that is the point in terms of volume. Okay. In terms of capacity, for now they have a capacity of 3,33,000 metric ton per year capacity, and they are looking to add their capacity. They are looking to double their capacity by FY28 towards like 70 lakh metric ton per year. So in terms of capacity addition also, they are expecting a good kind of capacity expansion. Okay, so that is the point with capacity expansion. And if I talk about the utilization of capacity, their capacity utilization is at 70%, and they are expecting it to grow in the future, so that if the capacity utilization grows in the future, the EBITDA margin will be higher. All of their parameter will be higher in the future, and they are expecting a better capacity utilization with capacity expansion. So if we see, they are expecting a really good growth in terms of their business. Okay, so if we talk about the EBITDA margin, in this quarter they have done a EBITDA margin of 8.9%, a year-on-year improved by 50 bps. But if we see their past, they have consistently grown their EBIT. They have consistently done EBITDA margin of 8 to 9% for last 6, 7, 8 quarters. Okay, so that is a really good thing, that the EBITDA margin is really good. In terms of EBITDA margin, the management is saying that as the value added product will be more, like in this quarter till FY25, the value added product contributes 46%. Okay, but towards like after 2 years, the management is expecting the value added products to be contribute around 50% to their revenue. So as the value added product contribution increases, okay, obviously the margin will also increase. So that is the point, and the management is saying also that in the coming future, as the value added product will be more and more, the EBITDA margin and the PAT margin also obviously will get a really good upward movement. Okay, so that is the point with EBITDA margin. And if we see their business, their EBITDA margin, their India EBITDA margin is less, but their overseas EBITDA margin is really high in terms of India. But yeah, they are looking to done a EBITDA margin of 18 to 19 rupees per kg. Okay, overall. But if we see the India EBITDA margin, that is around, if I am not wrong, that is around 11 rupees per kg, and overseas is 28 rupees per kg. So there is a huge difference in India and overseas EBITDA margin. But overall level, company is expecting a EBITDA margin of 18 to 19 rupees per kg. Okay, so that is the point with EBITDA margin. And if I talk about the PAT, in this quarter they grew their PAT by 36%. Okay, they have registered a PAT of 95 crore. So in terms of PAT growth, they are doing really good for last for last 3 years they are in a range of 20 to 30% PAT growth in last 3 years. So in terms of PAT growth, they are doing really consistently well, and they are expecting a PAT growth of 35% for next 4 years, 4 to 5 years. So that is the point with PAT and PAT growth. In terms of PAT margin, for the last few years, if we see from FY 2022, their PAT margin is increasing consistently well. Okay, and in this year also they increased their PAT margin. In this quarter also they increased their PAT margin by 1%. They registered a PAT margin of 9.15%. Okay, so in terms of PAT margin there is no issue. They are doing really well. And as I said, in EBITDA margin also, as the value added product mix will increase, the PAT margin also will increase. So that is the point with PAT margin. So in terms of all, if we see the another thing is ROCE. Okay, if I talk about the ROCE, in this year FY25 they have done a ROCE of 27%, and in the past also they have done a ROCE of in FY24 ROCE was 26%, in FY23 that was 31%. So in terms of ROCE they are doing extremely well, and the management is also expecting a 25% plus ROCE in the coming years. So as a whole company, Gravita is doing really well. All their parameters are going in a right direction if we see. And one thing also is very good with Gravita is they hedge their position. Okay, that is why their PAT margin is also increasing year by year. So that is the point with Gravita also, because if we see lead, aluminium, they are a metal product, steel, they will enter steel production also. So these all are a cyclical product. So we have to, if as a company they have to hedge the position, because if they do not hedge, there is a very good risk of loss in the inventory. So that is the point with Gravita. In terms of hedging, if we see, as they are hedging their all inventory, all other things, and that is why their margin is improving year on year. If we see for last 3-4 years. So that is the point. In terms of all the parameters, that is going in a right direction. If we see, we have to track the company, that how this company is going, how their executions are. But if I see there is no problem with the executions in the past, we have to track the company. That is the most important thing, and we have to see that if we can make a position or not. See, the main thing is we have to find out the best player in the space. Okay, and we have to track all of those companies in this space. So Gravita as a whole, if we see as a consolidated way, okay, then we can say it is doing really well in terms of the guidance also, in terms of the performance also. So that's it for the video. Thanks for watching.